Hello, hello. It is. God, we're midway through October 15th, 2025, episode 81. Hopefully, everyone's having a fantastic day. Man, we got some more shocks in the market. We're going to talk about that. Guys, what's crazy is that, the macro events, I think, more than any time in history, are really impacting markets. Yesterday, I think it was yesterday, we saw the tweet go out in reaction to the soybean situation, which we did a deep dive on last week. And Trump basically threatened to stop buying cooking oil from China, and it wiped out like $400 billion from the freaking stock market. Like, what is going on, man? That is the world we're in today. And that's why, I like to cover the macro stuff. A lot of the stuff that's happening, it's now reactions to news we covered last week. I'm going to kind of bring us up to speed on where we are, and then a couple of the events that we've covered that Trump hasn't responded to yet, and see what the reaction could be from the market. But I also want to talk about the crypto markets. There is some correlation that I found today with the Russell 2000, which is hitting new all-time highs today. Why that could bode well for altcoins in the crypto markets looking forward. We're also going to talk about really the big picture items with crypto, and kind of taking a view from a step back, and which projects I think could do really well. I mean, I think it's really important to zoom out a little bit at the big picture. And then in deep end, we're talking about some big news from 375 AI, some big announcements from Hivemapper. Let's see, GeoNet had a new announcement. And then I am going to finish the day with my thought process. I've mentioned I'm rebalancing my portfolio recently, and I want to walk you through, how I decide which positions I'm trimming, what I'm moving those positions into, and kind of the thought process behind that, on some of like the tax benefits potentially, as well as, looking at what upside there is. So we're going to cover all that great stuff. I do want to start off with this because I think it's kind of freaking hilarious. I don't know if you all saw that Trump was on the cover of Time, and he was not very happy with the picture they used. So it was after the whole Gaza Israeli peace agreement. This is what they posted on Time, and he had this to say about it. It's actually pretty funny. Actually, I'm going to read it while the picture's up there. I think it's funnier because he describes the picture there. He says, Time magazine wrote a relatively good story about me, but the picture may be the worst of all time. They disappeared my hair, and then had something floating on top of my head that looked like a floating crown, but an extremely small one. Really weird. I never liked taking pictures from underneath angles, but this is a super bad picture and deserves to be called out. What are they doing, and why? I don't know why that's so funny to me, but just the language around it. They disappeared my hair. They have something floating and it's really small. Oh man, get a crack out of that. Okay. Oh, guys, let's talk about where we are with all of the back and forth. It's all China, guys. It's all China. And the posturing, and something that Trump hit back with that hasn't really been highlighted too much in the news yet. We're also going to talk about a couple of events. It's like all stuff we covered a week ago that is now impacting markets. It's all about Trump's response to the events, Now, I will say, like, I don't do much TA on this show. It's not my strength. Okay, I've taken some TA courses. I like to look at it, but there are plenty of people that are really good at technical analysis, and that's not something I do on the show. I look at the macro stuff. Now, I want to say though, I have been paying very close attention to the people that have been really good at TA and really spot on, in particular this last year, that called not just upside, but called the downside, and have been really accurate on calling the top at the end of last year, and actually shorted the market publicly, called Aster, called Plasma, more recently called Z Chain. So Brandon, I'll pull up his account later, but he's in one person in particular, I've been paying attention to for the TA stuff because I think it's important. TA is important, but in my opinion, macros is as important as anything, guys. And that has been my strength, is really covering this stuff. And it's covering a lot of stuff that other people aren't covering. Let's be real, like in the crypto space, especially. But this China situation is very important. And I'm going to kind of pull it all together here and why I believe, October, which is what we were hoping for, all these things that have happened, I think may be pushing us into November, and that's okay. And at the end of this, I think it'll all make sense. But regarding the China tensions, Scott Bessent had this to say, and I think this part's very key.
Want to put on. And sir, to be clear, this is China versus the world. It's not a U.S.-China problem. Good news is that this is IMF week. A lot of my all my counterparts are here. We're going to be speaking with our European allies, with Australia, with Canada, with India, and the Asian democracies. And we're going to have a fulsome group response to this, because bureaucrats in China cannot manage the supply chain or the manufacturing process for the rest of the world.
This is really key, guys. So throughout this year, it has really been the U.S. against the world with the tariff situation. And a lot of people were kind of turning to China. Now China has really screwed over a lot of the world with threatening these controls on rare earth minerals. And we're starting to see other countries hit back. I touched on this the other day. Dutch government has already seized control of a Chinese-owned semiconductor maker in the Netherlands. Okay, so this is just one example of other countries fighting back. One thing in particular, though, that Trump is hitting back with, because obviously I did a deep dive last week on how the rare earth mineral controls that China is looking to employ could really destroy the global markets. Okay, this is something that Trump is hitting back with that could, it's pretty strategic, really. And again, all of this is leading up to their meeting at the end of this month that is still on, okay, as of now. About the 100% tariffs, okay? I think everyone knows about the 100% tariffs on Chinese goods starting November 1st. Now, again, notice it starts after their meeting would be, right? Giving them time to negotiate before that would happen. The other part of this, though, is that he's talking about putting export controls on American-made critical software. And this is an article speaking about Hong Kong businesses. That says experts are urging companies to develop alternative strategies due to proposed export controls on this critical software. It could be a painful adjustment. Now, speaking in purple about the tariffs, it says that at this point, for manufacturers, those who needed to move production have already relocated. It says that it's really not going to have a significant impact on Hong Kong businesses at this point, because they've been going through this all year. Says that really the litmus test is going to be Thanksgiving in November and Christmas sales in consumer markets. If that's weak, they could see a market crash in the U.S. The dollar would fall, and Trump would be forced to halt some of his tariff policies. And that China is not really going to be that impacted by tariffs at this point. But the critical controls on critical software, export controls, this is something new. And this is something I haven't seen people covering. And I want to read through the implications of this. So it says that in anticipation of export controls, technology experts urge the city's public institutions and private firms to accelerate their plans to replace any U.S.-made critical software systems and be prepared for a painful transition. Now, in speaking to one person over there, they said the definition of critical software was broad, and it could cover things such as aviation, medical sector, finance, telecommunications, cybersecurity, and infrastructure like utilities and railways. Says the curbs are unprecedented, as the U.S. has never restricted other countries from using its software except sanctions countries. Says, but my guess is that the curbs will be focused on cybersecurity concerning encrypted data protection. And he said, let's hope that Hong Kong will be exempted. So again, this is Trump fighting back like, hey, our tariffs aren't impacting them as much. Where else can we hit them? They use a lot of our software, guys. Says that he estimated in this case that 75% of Hong Kong firms used U.S.-made cybersecurity software, so they need to have a plan B although the process would be painful and lengthy. It says if the curb targets financial software such as the banking sector's SWIFT network, there would be tremendous implications, and Hong Kong's financial system will take a severe beating. The data migration will also be very painful. This other person, this Francis from Hong Kong Information Technology Federation, said critical software includes, according to their definition, core technologies for operating systems, cloud computing platforms, database management systems, electronic design automation, and then this part's really critical: software for chip design and AI intelligence model development tools. So, China's like, hey, we're going to hold back the materials for you to be able to manufacture your chips. And we're like, okay, well, then we're going to hold back the software for you to be able to fucking run your economy. Okay. The government and mainland owned enterprises have already switched Chinese software for a part of their operations. Of course, it's the government, but says that the city firms do not have any choice now. And there's tremendous risk of operational disruption. These software systems are the lifeblood of modern technology enterprises. They're indispensable cornerstones for Hong Kong companies engaged in semiconductor design, AI, application development, fintech, and cloud services. Okay, and this is obviously going to hit them. It says here, in the long run, this could shake the foundation of the entire innovation and technology system, leading multinational companies to reassess their decision to establish R&D centers outside of Hong Kong now and moving it to a place like Singapore. So this is something that Trump had in his back pocket. I think they were holding on to it in case China started to threaten the rare earth minerals, and they have pulled that out. Now that has certainly not been covered much in the news, but I think it's very strategic. And I think, again, all of this is posturing leading up to their negotiations, and that is happening at the end of this month. And you're going to see there's a lot of events that are happening at the end of October, beginning of November, that I think could turn things very much to the positive, depending on how this plays out. The other thing I did a deep dive on last week was the soybean thing. I know people are like, why are you talking about soybeans? Well, guys, this is what ended up freaking causing a $400 billion sell-off in the markets yesterday. So it says that Trump tweeted this out. China is purposefully not buying our soybeans. So they stopped buying our soybeans back in May. It says it's causing difficulty for our soybean farmers, and it's economically hostile act. We're considering terminating business with China having to do with cooking oil and other elements of trade as retribution. As an example, we can easily produce cooking oil. So this freaking tweet, okay, caused a $400 billion sell-off in the markets. It's like, this is insane, like seriously ridiculous. But again, it goes to show, as Suburban said here, the macro is so important right now. So I did a deep dive on soybeans last week. I'm not going to get too far into the weeds on this, but I do want to spell out how I think this is going to play out in the timeline again. And it's very interesting. I think a lot of people are missing this. They're not pulling it all together. Okay. So this is true. China stopped buying our soybeans back in May. It's our largest agricultural export in the US. Our soybean farmers are getting crushed right now. We were going to give them a package, basically a stimulus to help the farmers, but the government is shut down. They can't pass it. So we're stuck in this really tough spot right now. Now, the soybean farmers are pissed. Okay. And one of the things they're super pissed off about is that Argentina got rid of their export tariffs and are undercutting us in price in supplying China with an alternative source, allowing them to cut us off. And here's what it says here. So the Argentinian government cut export tax on soybeans. Chinese buyers jumped at the opportunity. And from here, this is official from the Soybean Farmers Association, that they've been clear for months. The administration needs to secure a deal with China. China is the world's largest soybean customer and typically our top export market. In our top export market, they are about a third of our buyer from our exports. The U.S. made zero sales to China since May, marketing due to 20% retaliatory tariffs imposed by China in response to U.S. tariffs. And Argentina has been buying. Okay, so let's piece this together a little bit because people were really pissed off about this. We essentially gave a lifeline, and that's what's being characterized, of $20 billion to Argentina because they have a struggling economy. This really did piss off the soybean farmers. They're like, okay, this country is undercutting us, screwing us, and you're giving them $20 billion. says that we are working on this $20 billion facility. This is from Scott Bessent, that would be adjacent to our swap line, blah, 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 aim to stabilize their market. Okay. So why are they doing this? Well, just yesterday, Trump met with Javier at the White House. What do you think those negotiations were? What do you think took place, guys? I would bet that this $20 billion, part of those negotiations are that, hey, you need to stop selling soybeans to freaking China. Okay. This is all leading up to their negotiations, taking back some leverage there. Trump, and this is catching some, I haven't seen a lot of people talk about this. People are really pissed off, and it is a little bit sketch. I'm not going to lie. Trump's basically saying like, hey, we're going to give you this $20 billion, but if Javier doesn't get elected, we're not going to help you. Okay. I mean, this is certainly, I think, interjecting into their election process. Okay. And it is basically hinging, because they need this bailout from the US. Essentially, this is forcing voters to reelect him if they want to save their economy. In other words, it says that the elections are on the 26th of October. Interesting timing. Okay, so yes, this hinges on him getting reelected, but I would bet my bottom dollar that this $20 billion, there are ties to this regarding soybeans to take back bargaining power when we meet with China. Okay, and that's a big deal. This is all part of this whole negotiation. So we have to see how this plays out. He even said it. The election is coming up very soon, Trump said. It's a very big election. Yeah, no kidding. Of course it is. If he loses, we are not going to be generous with Argentina. Okay. I don't know how you feel about that. I think that's a little bit crazy that he's just like outwardly fucking with their election. Anyway, it's all because of China, obviously. And obviously he needs to save our farmers here. Okay. Here's another thing though. And this one hasn't been, we covered it, but we have not seen Trump's response to this yet, guys. And this has to do with the port fees that are taking place. And this is something that if Trump sends out a tweet today, tomorrow, pissed off about port fees, the market can drop again. Okay. We need to look at the events that have taken place that China has put out there that we haven't seen the response from yet, because the markets tend to respond based on Trump's response. But this just started yesterday. We covered it last week, but went into effect yesterday. The U.S. and China started charging new port fees on each other's ships on Tuesday as trade tensions between the world's two biggest economies increase. China says that levies aim to safeguard the country's shipping industry, so they basically fought back, and they are applying them to U.S.-owned, operated, built, or flagged vessels. Now, they did announce an exemption earlier this week if it's U.S.-owned but built by China. Okay, and it makes sense. They want to continue having China build ships. And this is one of the things that Scott Bessent talked about very early in the year, that we need to stop having so much reliance on China for shipbuilding. We need to bring it back to the U.S. This has had a huge impact on China, by the way. Okay, this is from back in July. Chinese shipyards' market share dropped from 72% to 52%. So they had a massive market share. And it says a lot of this is likely because of the port fees that are just went into effect, right? People knew they were coming. So China's market share for shipbuilding has dropped significantly. So this is a big deal. So again, this is another part of this whole negotiation that's taking place. The port fee thing, we haven't seen Trump's response to China retaliating on that. So we have to see. That's another threat. Okay. Another thing that I think we're going to see coming up here, and there's been a lot of talk around this really in the last 24 hours, that could shock markets. This is Hegseth talking about Russia. Okay.
That's all that matters. Hard power. It's the only thing belligerents actually respect. Your continued investment and leadership are vital to helping Ukraine defend itself and to bring an end to this conflict. Peace through strength. Now, Europe's political leaders have also endorsed military planning for the coalition of the willing by establishing an operational headquarters and committing personnel to that multinational force. Should a peace arrangement be reached, European leaders are sending a clear message to Russia.
Okay. European leaders are sending a clear message to Russia. So they just got the Israel and Hamas situation. They got a peace deal in place. Next up is Russia and Ukraine. And there's a lot of focus being turned to this right now. And I'll talk about how this has to do with China as well. Okay. So we have Hegstead talking about it. We have Scott Bessent talking about meeting with the Prime Minister of Ukraine. Okay. Talking about their shared commitment to a free, sovereign Ukraine, working with G7 partners. How is China tied into this? Well, this is an article from about a month back that we covered that I think we're going to see in the forefront here. But the U.S. is urging G7 to impose up to 100% tariffs on China and India over Russian oil. So Russia is very dependent on their oil sales, guys. Oil prices are already down. That's hurting them for sure. And now they're trying to put extra pressure on China, preventing them from buying Russian oil and India. So it says finance ministers discuss Washington's proposal aimed at pushing Moscow to agree to Ukraine peace deal. So as they're pressuring G7 countries to hit India and China with tariffs, and it says that what they're saying here is the G7 should immediately impose 50 to 100% secondary tariffs on China and India for the repurchase of Russian crude oil. With all of the focus being turned right now to Russia, Ukraine, I wouldn't be surprised if this starts getting pushed up in the forefront again, and they're going to start talking about preventing China from buying Russian oil. Okay, so this is another thing we got to be looking for over the next couple of weeks. All that to say is, like, the next couple of weeks leading up to their meeting, there's going to be a lot of back and forth. There's going to be a lot of posturing for power, and any tweet at any time can push markets in one direction or the other. So we have to be really prepared for volatility. But a lot of this is coming to a head at the end of this month. And looking into November, I think there's a lot of really big catalysts coming. And that is why I think, October could be more like freaking roller coaster Tober, because we're all over the fucking place. But I think a lot of this could come to a head here in like the next 2 weeks. We've already talked about a lot of the stuff with China and their posturing there. But and this is, by the way, the oil prices, guys. The lower this goes, the more likely we are to see Russia and Ukraine get sorted out, because Russia loses a lot of power as oil prices go down. If we can then put more pressure on China in these negotiations to stop buying so much damn oil from Russia, that could bode actually really well, guys. If we get a peace deal out of Russia, Ukraine sometime in November, in the next couple of weeks following this China negotiation, that would be big freaking news for the markets. We saw how the markets reacted to the Israel situation. But how about this? FOMC meeting, October 28th and 29th. Huh. Same exact time frame, guys. That's right when Trump's meeting with China. Okay. As of right now, you have the Fed meeting, or the Fed decision, looking like a 97% of at least a rate cut, 2%, 50, and 95% of a 25 basis point decrease. So that's basically baked into markets at this point. The other thing that came up is that Jerome Powell's talking about, hey, we're at a point where we can stop quantitative tightening. How about that? So we knew that was coming, but he actually said it. He hasn't said it to this point, but it says that our long stated plan is to stop balance sheet runoff when reserves are somewhat above the level that we judge consistent with ample reserve conditions. We may approach that point in coming months, and we are closely monitoring a wide range of indicators to perform this decision. In other words, guys, QT is ending. QE will likely start back up again, and it shouldn't be a shock to anyone, because if you look at the reverse repo market, guys, they were doing stealth QE for the last couple of years. Well, guess what? They can't do it anymore. They're not holding any more liquidity to be able to push out into the markets. This lever is gone, and it should be no shock that now they're talking about ending QT and starting QE, because they no longer can do stealth QE through the repo markets. Okay, so another thing that within the next month or two, we're likely going to start to see QE announced. Okay, so a lot of this is coming together at the end of the month, though. The other thing I want to call out here is that markets are already reacting to rate cuts and to the announcement of QT ending, and that is the Russell 2000 index that hit an all-time high today. This is really important to call out. This is small caps, And generally speaking, when you see this index go up, that means that people's risk appetite is coming back. Okay. That means they're going away from the larger, safer investments and moving more towards small caps. And I found this article, and it came out about a week ago. I thought this was very interesting because I was looking at what's the correlation between Russell 2000 and crypto. There's an incredible correlation between Ethereum and the Russell 2000, and they actually move in tandem. It says here that Ethereum has been highly correlated with small cap equities, which are very sensitive to interest rates. And analysts say both could move higher with more cuts on the horizon. Both are highly sensitive to interest rates, and with as many as 4 consecutive rates potentially on the horizon, the analysts said to expect both of them to move up in tandem. Look at this chart, guys. This is kind of insane. This is Ethereum against the Russell 2000. There is strong correlation here. And we're seeing the Russell 2000 hit new all-time highs. And I think that is a reaction to the Fed lowering rates, to quantitative easing likely coming soon. That bodes very well, obviously, for our alts. And I think Benjamin Cohen, this guy's very sharp. He does very good TA. He said that the reason I said in August that it was not an alt season because I expect ETH to get rejected on the first attempt. Alt BTC pairs went lower while ETH BTC should put in a higher low. What happens next for alts depends on ETH's ability to break 5,000. Okay, so could this be, with the Russell 2000 going up, and that correlation there, could we see Ethereum push back above 5,000 and hold? I believe he has some credence to this. And again, he's been very accurate, guys. If we see that push up, I think that could bode very well for our alts looking into the rest of Q4. The other thing I'll say is the government shutdown is having a big impact on things as well in crypto. For one, look at the time frame here, guys, on Polymarket. October 27th to November 3rd, there's about a 32% chance. It's the most likely scenario as of right now in the betting markets for the government shutdown to end. That also happens to be when the China negotiations are taking place, when the next Fed rate cut's happening. Okay, there's a lot that's happening all within in like 2-week time frame. Potentially. We don't have a guarantee here. But why does this matter? Well, says the ETF floodgates are ready to burst, but all these spot ETFs are being delayed because the government shut down. Okay. In total, says that there's 16 ETF funds waiting for approval should the shutdown continue into November. It says there's 16, another 21 applications filed in the first 8 days of October. Shutdown has left everything in limbo. Obviously, we've talked about this a lot. This is a huge catalyst for money coming into the crypto space. Okay, so government shutdown. Imagine if the government shutdown ends at the end of the month, we get good news out of China. They agree to stop buying as much oil from Russia. We can end the Russia-Ukraine thing, get a peace agreement there. I mean, if all this came together, guys, I'm not saying it's going to, but the stars are certainly aligning that this could be what comes together in 2 to 3 weeks. If that does happen, expect from freaking fireworks, guys. The other part of this government shutdown, though, is it's also complicating the market structure bill. So just going to say that the government shutdown last week may not completely derail the crypto legislation efforts, but according to insiders, certainly not helping. It does go on to say that there's a small setback, but I know there's a high priority for the House and Senate, particularly over the Senate side right now. They're continuing to have discussions. Right now, they're looking at a 60% chance that it'll get passed by the end of the year. Okay, so the sooner we can get the government shutdown over, the more likely this bill is to pass this year. Moving forward, the next catalyst, guys, Solana breakpoint, December 11th and 13th. This is always a big catalyst, especially for deep end projects. We've seen it time and time again. This also just so happens to be when the next rate cut's happening, December 9th and 10th. Okay, so we've got the rate cuts coinciding with a lot of potentially positive news for the market. Then you also have this rate cut taking place right around Solana breakpoint. Okay, could we see a big melt up in November and December? If all these things align, I certainly think that's possible. And you look at the Fed rate cut decision right now, looking at about 87% chance of a rate cut in December. So that is how I think this could play out. You know, I think there's plenty of reasons to be concerned about volatility over the next couple of weeks. But I think if things align, you know, as I just laid out, man, things could be pretty awesome in November and December. Yeah, that's funny. Yeah, that's a good point to bring up though. Is that the SEC? We have talked about that with Deepin. The SEC did come out and state that Deepin projects do not satisfy the Howey test. So I actually sent out a tweet about this. This happened a couple weeks ago. Here you go. So Deepin projects do not fall under the SEC. So yet another catalyst that for Deepin specifically, but this is absolutely true. I brought this up on our happy hour, I think, a couple weeks ago, talking about how now everyone's going to be a Deepin. So now how do you determine what is and is not a Deepin? Anyway, guys, that's the macro side of things. I think it's, again, as important as ever to be paying attention to these things because we've seen how it moves markets. We saw the biggest liquidation event ever in the history of crypto. Part of that was because Binance pricing Oracle was all effed up. But the catalyst that led to that was Trump's response to China. You know, we've got a couple of other things that Trump has yet to respond to. We got to keep an eye on. Okay. But I think all those things in play, when you connect the dots, a lot of that lines up for end of October, beginning of November is a very critical time. And there's going to be a lot happening. And it could be very good, potentially, I think, for the outlook of crypto for the rest of this year. Here's an interesting thought moving into the crypto side of things. This guy's been pretty spot on too. I gotta say, he's cut some really good calls as far as when the market. A lot of people are calling for the market to keep going up. He's definitely called some major reversals in the market, especially recently. He says that he thinks the 4-year cycle is over, and it has to do with monetary easing and you know, Raoul Powell's in that camp as well. And they both believe that we could see the market cycle move into 2026 based on the quantitative easing from the Fed. We'll see. But this is kind of his prediction here. I think that there is some truth to that. I think that, you know, the easing cycle and the Fed policy certainly does have an impact on crypto. There's a lot of mixed feelings about where things are headed. Obviously, I mean, just 3 weeks ago, everyone was like super bullish. And now, you know, the China conflict, everyone's like, oh, you know, market cycle's over, bear market's here. No one fucking knows, man. But we can look at the macro events and look at the catalysts. And instead of just looking at like a 4-year chart, you know, pull together the information that actually matters. Look at Bitcoin sitting at over 111,000 right now. The big news around Bitcoin really happened yesterday. So there's this story that came out that the Fed seized $15 billion in Bitcoin after busting an alleged global crypto scam. Goes on to say here that today the FBI and partners from Cash Patel, FBI and partners executed one of the largest financial fraud takedowns in history. This is an individual who allegedly operated a vast criminal network across multiple continents involving forced labor, money laundering, investment schemes, and stolen assets, targeting millions of innocent victims in the process. Says that they called it a pig butchering scam, or when scammers dupe a victim into phony investments. So this is funny. I had somebody there like, man, I need to get into pig butchering, apparently. I'm like, yeah, bro. By the way, by definition, it doesn't actually involve butchering pigs, guys. It's a long con investment fraud that starts with building trust over time, often through a fake romance or friendship, and basically over time gets more and more money out of them and extracts more and more money out of them. It's not actually a pig butchering business, guys. Got that text, I was dying. But why does that matter? Well, we know that the U.S. is building a strategic reserve. They said they plan on adding to it. They alluded to adding to it through seized assets, because this increases the U.S. government Bitcoin holdings to $36 billion. Now, of course, that has to go through legal proceedings before this falls under custody and ownership of the U.S. So we're custodying it right now, but until we have direct ownership of it. But this, as it says here, that's 127,271 Bitcoin that they were seizing, that they seized in this. This would bring the U.S. holdings to around 350,000 Bitcoin in total. This is a big freaking seizure, guys. I did the math. I want to say that's like 1.6% of the total supply of Bitcoin now held by the U.S. government. If this goes through legal proceedings and we continue to have ownership of those assets, that would go into the strategic Bitcoin reserve for the U.S. So that's why it's a big deal. Something else I want to talk about is looking at the crypto landscape and some of the larger caps and what we need to look at as far as, which investments could be the best. And I think one of the things we lose touch in the short term and looking at all the market volatility is just like where we are in crypto adoption. Because guys, stocks, the credit markets, everything is going to get tokenized. And we're talking about right now a $4 trillion crypto industry that there's going to be an additional $100 trillion of dollars coming in and coming on chain. Okay. And I think anytime you can get exposure to some of the projects that are going to be instrumental in that movement is going to be really important. But to this point, says BlackRock CEO sees new wave of capital and tokenization. It says here that they expect traditional financial assets to shift towards a tokenized version of themselves over the next few decades. We look at that as the next wave of opportunity for BlackRock over the next tens of years as we start moving away from traditional finance assets by repotting them in a digital manner and having people stay in that digital ecosystem. We also have the CEO of Coinbase talking about just that.
New types of investments and asset classes, capital formation, credit, like all these things can get reinvented, made more efficient in the crypto world. And that's ultimately what we're trying to do. We're trying to create more economic freedom in the world and update the financial system.
Yes. And again, we're talking about $100 trillion of capital in credit markets that are going to be rebuilt on chain. So what projects are going to be able to capture some of that value? That's obviously the big question. Well, we see Chainlink has been involved in freaking everything, guys. Like every institutional announcement, Chainlink is there. I believe Chainlink is going to be one of the better performing assets looking forward. It's sitting at a 20% correction over the last week following that big drop. God, that thing got all the way down to like 11. It wicked all the way down to freaking $11. That's stupid. Chainlink to me, and there's spot ETFs that are going to be approved for Chainlink, guys. That's coming. So this is one of my big plays for larger caps that I think are going to be instrumental in this movement. And really, if you're willing to stomach the long, the short term ups and downs and the volatility, I believe this is one that you can hold long term. The next one, Solana. Look at the stablecoin supply on Solana, guys. It's just like freaking going crazy right now. So talk about bringing assets on chain. What's up, William? What's up, buddy? And we've got Solana right now is responsible for 95% of tokenized stock trading. Okay, now that might not stay that way, but as of today, it is the preferred chain. Obviously, that's where all of the tokenized stock trading is taking place. I would expect that you're going to see some layer twos and Ethereum gain some traction there, but Solana obviously has a lot of tailwinds right now. You also look at the fact that in the last 24 hours, it's the number one in DEX volume. So Solana, to me, and they have a ton of spot ETFs that are about to get approved. You see the DATs accumulating, sitting at $194, down 15% over the last week. But still, since we started really covering it back in August, and really beating that drum, we are down at $170, I think, something like that. So we're still up, but obviously it's corrected a bit. The other one, and there's really the top three that I've been focusing on building positions in, is Avalanche. I think people are sleeping on this. We had that S&P 50 fund that was announced a week or two ago, with 15 cryptocurrencies and 35 crypto stocks. Avalanche is one of them, but this whole fund is also being built on Avalanche. Okay. And they have a lot of Web2 customers. South Korea just announced that they're launching their stablecoin on Avalanche. It's another one that's gotten beaten down 24% over the last week. So those are the three that, from a high level, from a large cap perspective, that are partnering with a lot of institutional investors that I think are going to be critical to the infrastructure in this movement that we're going to see. Now, getting into deep end, and I want to talk about some updates on a handful of projects. And I also want to talk about the rebalancing of my portfolio. And in particular, I'm going to give an example of my thought process and why I'm rebalancing in the way that I am. Obviously, today we're seeing things down again. Demo, like a random pump. I don't know what that happens sometimes. But look at some of these, man. Over the last week, it's been ugly, right? A lot of small caps have gotten absolutely destroyed. All that to say, like, I do believe that the market will rebound after the next couple of weeks. I think that we could see things turn in the right direction here, but we have to see how it plays out with China. I mean, if escalations continue, things get worse. Nothing's guaranteed here, guys. But in particular, you guys know the projects. I talk about them all the time. I'm going to go through a couple here, but 375 AI is one that I'm very interested in. I've interviewed Harry. They oversubscribed on their 375 AI token sale. So this wasn't even open to people in the US and Canada. Not to mention, like, the process for KYC was pretty arduous through CoinList, and they still oversubscribed on their token sale. They are expecting to have their TGE later this month. We don't have an exact date yet, but that is coming. So that's one project to certainly keep an eye on. GeoNet continues to announce partnerships, guys. They're killing it on the revenue side of things, on the utility side of things. This one is a customer out of India. So obviously another big announcement out of them, guys. They continue. William, what are you talking about? You wish. You missed the first part of the show, buddy. You have to rewatch it. We have Ariel giving some testimonials from different fleets around the country, talking about how they've been, this group here, they say that they have deployed 300 B devices across their fleet. Say it's seamless, etc. That's big. That's big news, guys. Obviously, we just had the announcement they have a $19 per month plan. You get the hardware, get the Helium mobile plan. If you already have a BLTE, you can actually get a Helium mobile plan for $10 a month now through them. The other thing I thought was interesting was this post. Pairing a new device to the B. What do you guys think that could be? Interesting stuff there. So that's another announcement coming, guys. And that is why we did push this AMA out a couple of weeks, because there's some big announcements still coming from HiveMapper. This one's going to be an interesting one. I'm curious if anyone can throw some guesses out as to what that could be. Yesterday, I had like a 2-hour freaking session with Havelo. We went through the entire deep end landscape, man. We covered a lot of projects, a lot of new developments across those projects. So I have it on my channel as well. Check those out if you haven't already. And lastly, before we get into my rebalancing, we had a really good space yesterday with Mark from Streamer. So they talked about some of the stuff they're working on with Streamer TV and some of their developments. So worth a listen for sure. It's a project that's been around a long time, but it was a great discussion. Okay, guys, you all know that I've been really vocal about rebalancing my portfolio, cutting some projects that maybe have been underperforming that I might not be so excited about in the short term, and in lieu of projects that I think could perform really well. Robotics is the sector I'm hyper focused on right now. You guys know Aoki Network. I'm trying to build as big a bag as I possibly can right now in Aoki. I already have a big GeoNet bag. I have a pretty substantial Rover bag. Those are really my focuses right now, with Aoki being the top one, because I want to build more into that position. Now the question is, like, how do I determine, at least, and like, obviously you need to look at your risk tolerance, you need to look at your time frame, and it's going to be different for everyone. But I want to walk you through my thought process. So I own some render. Let me pull this chart up real quick. I own some Render. Okay. Great project. Great team. They're doing big things. I think the project can rebound for sure. But look at this. It's a $1.38 billion market cap. They've had dilution. I mean, if you look at the price, we can see the all-time high price that we got to was at, $12. I think it actually got up. Well, maybe it didn't get up. Maybe $11.70. Let's call it. Okay. But if you look at the market cap, the all-time high market cap, we got about $5 billion. Okay. If we were at this point to let's say we got back up to the all-time high market cap on Render. Okay. And you got to think, like, what catalyst would get us there? Really just market conditions. They already have a lot of centralized exchange listings. People know who Render is. It's not, it's not going to be some new pump. I think it's really it's going to be from market conditions improving. But even if we did get back to that, you're looking at just over a 3x. And that is assuming we can get back to these market caps. Like, I like that upside. It's fine. Okay. But when I'm looking at something like Aoki, on the other hand, that's hitting robotics, doesn't have any major centralized exchange listings yet. Just announced several multi-million-dollar deals, are talking to the largest robotics companies in the world. I don't think it's had its big run yet at all. Looking at a $77 million market cap, I like the upside on this a lot more. Okay. To me, Aoki has far more upside. It's hitting the sector that I think has yet to run. And I think that there's a lot of catalysts that are coming that haven't hit yet for this project. So looking at, rebalancing, I've been dollar cost averaging Render for years, but I believe we're below the price point that my average entry. So if I cut that position, looking at the upside, because I think it's a little bit limited from this point, I can take a loss on my taxes by doing so. Okay, because I'm taking a loss on my position. I can redeploy that into Aoki, which I believe personally has a lot more upside. Okay, look at how this thing's held up over the last week. This was the dip from the market dropping out. Look at where we're at today. It's one of the best charts in all of crypto right now. And I think it's because the fundamentals are so freaking strong. And looking at a $77 million market cap, I believe that this project has tremendous upside. Okay. So those are the positions, the Render type positions where I'm like, where's the upside at? Where are the catalysts going to be? And am I better off taking a loss, cutting my losses on that, and moving into Aoki where I have upside? And I think so in this case. And that is why, I do plan on cutting the majority of my Render position and moving into Aoki, full out. I have several other positions that I'm looking at doing that with, consolidating into the projects that I think will outperform. And I think it's important because we've seen with this market cycle, especially, individual sectors run at different times. You're not going to see everything push up at the same time anymore. It just doesn't happen. So you have to be very selective. You have to do your research. You have to figure out what your risk, appetite is, time frame is, and make those decisions. But that is what I'm doing actively right now. Okay. And that's my thought process behind it. And there's tax benefits there, baby. Let's see. Do we have any comments in here? William coming in hot with the Eden deep intake. Where's that at? I missed that. Where's the Eden deep intake? I don't have any exposure to Eden, guys, sadly. Oh, I love AR. ROE is a great project. Guys, ROE got down to $1.50 on and it's up to like $4.50 right now. ROE is a great project. Wingbits. I like Wingbits. Wingbits is a good project, man. Yeah, they haven't launched their token yet. For them, it depends. Like, what price do they launch their token at? What market cap? How big is their addressable market? I think it's going to be a great project. I think that fundamentally it makes sense. We just don't know what upside looks like. Prize. Are they still around? I don't know, man. Let's see. Did I miss any comments? I didn't see any Eden comments, Suburban. Anyway, y'all. That's what I got, man. I think next couple weeks we'll keep an eye on Trump's Twitter account. But I do believe, I think the China situation can get resolved. It would be great if the Russia situation gets resolved. We'll see how that plays out. I think there's reasons to believe it could. We got rate cuts coming. We got the government shutdown at some point. It's going to end. Spot ETFs are coming. We have crypto legislation that's going to be approved hopefully this year. More rate cuts. Man, there's so many positive things happening right now. We had our first deep end project and Aether get added to a balance sheet on a publicly traded company. Like, seriously, y'all. So now is the time to lock in. And that is what I got for you today. I will catch you all tomorrow. Peace.